All right, good evening. Okay, quick check. Just to make sure everything is running well because this is the very first time we're doing this. If you're able to see my screen and hear me as well, okay, which means the audio and the video is fine. Just help me to type OK. Then we are good to start. Cool. All right, great. So we get started for today. Because this is gonna be the first time. Oh, give me a while, yeah. Okay, give me a while. I think the other side had some issue. Okay. Because the other side they're using Zoom, right? So we're actually concurrently streaming both sides. I think the Zoom crashed. Give me a while. All right. Okay, so I think the host connection got cut off. I think that's the reason why the entire Zoom was down, right? Okay, anyway, let's get started for today. Okay, sorry about that quick technical issue. Okay, so let's get started because this is the very first time that we're running this. Okay, so we're gonna quickly walk through the overall structure so that you know and you know what to expect. And what we're planning to do is we're gonna run this on a weekly basis. Okay, so every Monday same time so that you are aware of the consistency as well. We're gonna do something similar as what you see today. Okay, so what we're gonna do is that we're gonna talk about Elliott Wave. We're gonna straight away jump into the market, share with you some analysis. The objective over here, I try to keep it within about 30 to 40 minutes plus a little bit of Q&A at the end. If some of you have questions with regards to some of the instruments, the market that you're looking at. Okay, so quick disclaimer over here. What we're gonna cover today, there might be opportunities that we talk about, trade setups and things like that. Just want to quickly share it out that whatever we are covering today is for educational purposes. Okay, and if you're fairly new to trading, just make sure you're aware of the risks involved in it. Okay, and whatever advice and opinions that I share are solely personal. Okay, and they are not meant to be used directly as financial advice. Yeah. So overall structure for today, and of course moving forward, this is what can be throughout. Okay, every time you run it, it's going to be something similar like that. I will run down I would say a summarized version of what happened the previous week so that you get quickly in tune with the updated market news, okay, whatever has happened so that you know. Then we'll go through the economic events to take note for the week. Okay, so we're going to use like Forex Factory to understand a little bit on that. And then from there, we'll jump into the technical analysis to share with you the major pairs, including gold, silver, crude oil, as well as the general S&P indices. Okay, so that from there, we'll look into some opportunities available. Okay. And last but not least, we'll end off with a 10 minutes Q&A, right? So again, I want to keep this session short and concise as best as we can within about 45 minutes because if you stretch out too long, again, your attention span is going to drop, okay? So we want to keep it short, sweet, and to the point. All right, so that's what we're going to cover for today. So let's get started straight up with the events calendar over here. Okay, let's take a look at what's happening last week. Okay, so as of last week, you can see pretty interesting in terms of Thursday. We have a lot of central banks decision. The highlight over here, one of it is definitely the FOMC. Okay, the Fed's funds rate. Nothing surprising from the Fed. We did see a rate hike. But what's more crucial is the press conference where Jerome Powell actually mentioned, there are, in my own words, summarized version, right? The Fed is actually willing to sacrifice labor, and we call it a hard landing, which means that they don't mind short-term pain, which also can potentially means they're open to the idea that, okay, if there's a recession, it's fine, but tackling inflation is their primary objective right now. Okay, so this is a little bit scary to some, right? But at the same time, it becomes very clear what you want to focus on moving forward. The Fed makes it very, very clear. Their primary goal right now is to bring down inflation. Okay, so whatever it is, I think moving forward, if the inflation rate, the pressure on inflation is not being subdued, it's not being brought down, they're gonna be even more aggressive in hiking rates, right? And they know that hiking rates are going to hurt the market. They know hiking rates are going to hurt general people as well, businesses as well. There's a very high chance we're already going into a recession next year, but they don't care, okay? Because their primary goal is to tackle inflation. Okay, so that's, I think, the important aspect that you need to know from the FOMC press conference and the statement last week. BOE was another very interesting one because they did hike rate, but if you observe the pound last week, we had kind of like a mini crash in pound. But this week when the market opened, the pound actually rallied significantly, which later when we look at the charts, again, I always highlight, don't trade just because the market move off in a very strong direction, right? Case in point again, as we saw last Friday on pound and then today on pound. But what actually triggered that sell-off in pound? You might think, right? Fundamentally, if a central bank hike rate, shouldn't that be positive for the particular currency? Okay, but I think one thing that was crucial, of course you can see it from just the data over here. But one thing was crucial was the tax card, okay, from Bank of England, and that kind of sent a message, I would say a fear message to the economy, to the people, right, that they are bracing for a hard landing, right? Again, I think a lot of central banks and countries are prepared for that. So that kind of trigger that sell-off, I would say, in the pound. Okay, but as of today, we actually see that rally back up, that bounce back up. When we look at the chart later, you see what I mean. Okay, so that's something to note as well. Okay, so overall, I think that's the important highlights from last week. So going into this week here, of course, if you're gonna compare last week and this week is generally gonna be a little bit more quiet. Yeah, simply because last week there's a lot of things, right? So this week here, I think two main more important data that you want to keep an eye on will be number one, on Thursday we have the Canadian GDP. Again, if this is expected to come in negative and it comes out negative, means that we're potentially going into recession, right? And another one is on 8:30 core PCE price index. This is the very first data after the Fed's fund rate that is tied to inflation. Okay, so PCE price index is actually very, very important. The central bank actually tracks this indicator as part of their inflationary indicator as well. Okay, so you can see previous month was 0.1, this time around they expected 0.5. If the actual data comes out very, very high as well, means that inflationary pressure is still there. There's a good chance we're going to see the dollar strengthen even more. Okay, at least from a fundamental point of view. Good. Okay, so with that, let's jump into the charts and look at the overall market. Okay, now I like to start off looking at the dollar index over here, okay, because that gives us a very broad picture as to what the dollar is doing. Some of this drawing might be a little bit advanced for some of you, okay, but I will do my very best to explain it in a simpler way, okay, so that you can kind of understand where I'm coming from, what are some of my thought process and opinion on it. Now, this is a dollar index chart on a forward time frame. Okay, so as of now, what we are seeing from here is that potentially we have completed a big three-wave move. We do have a little bit of a Fibonacci confluence here, you can see as well. As of today, the market is giving off a pretty interesting reaction of that area. Okay, and from an Elliott Wave principle, we tend to expect a reaction after a completed 1, 2, 3. Okay, and of course, if you combine it with Fibonacci, that adds additional confluences. And we are seeing it from price action perspective right now as well. The market is coming down. Okay, but to me, it's a little bit still very early to say that, okay, we're going to sell the dollar now. Because we want to then give it sufficient time to prove to us that it's a reversal. Okay. So at this moment, you can see on the bottom right, okay, my directional bias on the dollar is still neutral, which means that I don't want to be looking for buy opportunity, or I'm not also looking for a sell opportunity as of today. However, if going forward this week, we can see a little bit more downside, we can see a tiny bit of a consolidation here. Okay, this probably need to take some time building up, maybe towards Friday, where we have the core PCE price index. Maybe the core PCE price index comes in very low, which means that maybe inflation pressure is starting to ease off. The Fed doesn't need to be so aggressive. We might see the dollar sell off. If that happens, we have this technical pattern here as well. Then we can at least look for a short-term retracement or to the downside, right? Then from there, the directional bias is going to shift towards being bearish. Okay, so that's on the major dollar. And of course, if we flip it to the euro dollar, it's kind of inverse in its relationship. And of course, in euro dollar over here, we can see a very nice 1, 2, 3 as well. We do have a little bit of Fibonacci confluence around the 9555. Okay, and of course, today we do see a little bit of a V-shaped reaction. So if you look at the dollar index and then you look at the euro dollar, most of the time it's just inverse. So similarly here, if you can see a little bit of a consolidation on euro, giving it maybe another 2 to 3 days on Wednesday, on Thursday, if we can see a good correction pattern, there's a good chance that we can see more upside for the euro. My final target is actually somewhere higher if that happens. But naturally, we do have a little bit of a support resistance area here. you might want to then also take partial profits as the market move higher from there. Okay, so not buying it now, but more importantly is to wait for at least a tiny bit of a consolidation to again give us that confirmation that all right, it seems that there's a high possibility this would rally, and therefore we look for the buy. Okay, so as of today, is starting to show that sign of reversal, but give it maybe another 2 to 3 days, then it becomes way clearer. Okay. On the pound, right? So just now we mentioned that we had a very significant sell-off, and then today we had a very big rally. Now you might think that this is small. It's not, right? If I were to measure this move very quickly from Friday to the bottom, it's almost an 8% move, right? 8% on a single day in any market is huge. I mean, maybe crypto is considered small, but if you're talking about FX, you're talking about equities, you're talking about indices. 8% in a single day is a very huge movement. Okay, in terms of actual pip count, that's almost like 900 pips, which is again huge, right? In a single day. We haven't seen such volatility for some time. I think in pound, the previous one event that causes such volatility was Brexit. Okay. But you see today we kind of rally almost back to like 50 or even 61.8% of that move on Friday. Right. Yeah, almost exactly at 61.8. So this is again the idea where every time you just see a strong move, you don't want to touch it first, right? Because something like this can happen. Okay? Just imagine if you realize that, oh, the market is coming down very strong, and you have this thing what we call FOMO, the fear of missing out, and you just jump in, because the market is coming down, you just jump and sell. You might be caught in such situation, right? So that's why most of the time when we just see a strong move, we don't want to touch it. We give it time. And when we see a bounce like that, is usually indicating a potential rejection. So pound dollar over here is quite similar to euro. If we can see a tiny bit of a consolidation here, give it, I think, about 2 to 3 days, same thing, right? Wednesday, Thursday, if you come back and see something like that, there's a good possibility we're going to see another upside for the pound dollar. Okay, so keep an eye on that. Again, you need to be patient. I think those trades that we covered just now would likely come nearer towards the end of the week. Okay. Then we have Aussie dollar. Aussie dollar is also developing a pretty neat structure from an Elliott Wave perspective. So we kind of can see that this is a 1, 2, 3 quite clear. We get a very nice bounce coming back to the 50% of this move, and then we had another move down. And we are getting very, very close to this reaction point here, which I expect the market to have some form of reaction around that 0.6480 area. If you're looking at a reversal trade, okay, so for those of you who are a bit more on the counter trend trader, you want to start paying attention to that around this area at 6480. If let's say give it another 2 days, right, by Wednesday, if you can see a very nice little crawl pattern over here, if you're familiar with RSI or any oscillator, you put that indicator in, you look for a divergence as a confluence, and you can get a divergence, right, and this pattern here develop, you can look for a reversal trade back towards this high here, which is somewhere around 6705. Just take note that it's a little bit on the aggressive side because you're actually doing a counter trend trade, right? The trend is really coming down, it's quite obvious. If you're taking the buy, you are taking the reversal of it. Okay, but for those of you who are interested, I think that's where the opportunity comes for Aussie dollar. Okay, and then we have the dollar Canadian. The dollar Canadian, as of last week, we have seen a very, very significant rally. However, we are now entering into this zone between the 123.6 and the 1618 Fibonacci extension. What I'm seeing over here is this is a 1, 2, and then this is the third move. So every time, as I mentioned, in terms of FX, okay, when we see a 3-wave move, there's a good possibility that we're going to see a bigger pullback. Okay, again, Nothing is 100%, but as of now, this is the expectation that I have. So what I can do over here is I can also pull in a little bit of a Fibonacci retracement from the swing low here to swing high. So we can expect a bit of a pullback, ideally towards 50 and 618, where we again have a little bit of a confluence of this trend line here, and then the market may bounce higher from there, or it can just break down. Okay. I think we don't need to forecast too far into the future, but at least for now, I'm expecting a bit of a pullback here after this strong move. Okay, so in terms of dollar Canadian, it's definitely very aggressive if you want to sell it. But if you have a strategy, okay, that fits into a counter trend technique, do look out for it. Okay, so Aussie dollar and dollar Canadian, you can start to look for a counter trend setup. Okay, maybe you'll need to go down to maybe a lower time frame and things like that. Built in, something like this. If you pull out your RSI, pretty sure you'll start to see a little bit of a divergence. Then you can start to take this trade to the downside. All right. So that's on dollar Canadian. Now just take in mind that whatever I'm sharing with you here is more of a time frame and time horizon for within the week. Okay. And I'm sharing with you what I'm seeing based on the market right now. Okay, and be aware that market conditions can change throughout the week. Okay. So obviously what I can do is only share with you what I'm seeing now. Okay, so be aware of that as well. Yeah. Okay, so as the market progresses, as the market develops, maybe on Wednesday things might change. Okay, so you need to be aware of it as well. Okay, dollar yen. Okay, dollar yen over here, I would say this week you might not get anything out of it. I do write a little bit of a commentary over here as well. From an Elliott Wave perspective, it's tricky on dollar yen because we have two possible scenarios that can eventually develop into. One of it is what you've seen over here, as I labeled 1, 2, 3, 4, and then this is 5, and therefore we start to see a bigger move to the downside. That would give us a bearish bias. However, what we can also see in terms of a second scenario is that this is wave 4 and wave 5 is higher, and 145.90 level, this little high here, might be broken. Okay, so for me right now, it's a little bit uncertain, unclear in terms of the pattern that is developing, and I would personally suggest then to just stay out of maybe the dollar yen for the week. Okay, because as things are gonna develop, it takes time, and when things are taking time, then you want to channel your focus on something else. Okay, so for me, what I see over here is euro dollar is one of the pair I think it's worth monitoring for the week, combined with Aussie dollar and the dollar CAD. I think this tree is gonna give you a higher possibility of a trade as compared to the dollar yen. Okay. Another one very quickly over here is a potential one on Euro Aussie. Okay, now I seldom share crosses. Most of the time we just cover the majors, but just want to add this in here as well. On the daily time frame, we have this little double bottom, and the market seems to be pulling down a little bit. So if you can get a little bit more of a downside here towards maybe 50 and 618, we can start to look for upside and retest of this. Okay, so overall it's still in a range bound environment for the euro odd, but this upside here can be quite interesting because we are already on the daily time frame, which means that potential move can be quite interesting as well. Okay, so that's one. One cross. Okay, to add it into your watch list for the week. Now gold over here. I have a sell trade running since last week. If you're not in any sell for now, I wouldn't suggest you to go and initiate a position. Very quickly over here for a little bit of an educational purposes as well, so that you can understand the thought process as to why we sold it. It's really about pattern recognition. Okay, so if you look at this impulse, you look at this correction here, that's where we sell this trade because there's a high possibility of that move. You can see this pattern here as well, impulse, a tiny bit of consolidation, and then it drops, right? So we're essentially just trading that pattern. So right now, if because we have shift stops to break even, for me, I've personally shift stops to break even. But looking at how the development is forming right now, it seems to be a little bit of a V shape. Okay, so probably not something that I would encourage you to be looking for a sell now, right? It's more going to be rotating into a neutral bias, and we want to see how the market develops. Long term though, if you ask me, I'm actually bullish on the precious metal gold and silver. Okay, but you need to probably add in a little bit of technical analysis to time your entry, even if you're looking in the long term. For now, it's not that clear yet. Okay, so that's my view on gold. Okay, silver, however, is giving a pretty neat potential that you can keep an eye on for the week. Right now, what I see over here is if I were to add this label in, this seems to be a 3-wave move, which may have completed as a WXY. We do see a little bit of a bounce right now. As I mentioned, this is a little bit early, right? We need to wait for at least some kind of consolidation here to increase the probability of an upside. But we are seeing a little bit of a reaction, right? So that's great. So this level here is somewhere around 1845. If the market can maintain above this and give us maybe on the lower time frame, okay, a tiny bit of consolidation here, then that will be fantastic, right? You can start to look for upside. Maybe gold isn't presenting a very clear picture at this moment, but silver definitely is if you can get this. Okay, on the 1-hour scale, to get a correction, you probably need to give it maybe a day. So if you come back on Wednesday and you can see that, you have a high chance of an upside for silver. Okay, so keep an eye on that. If I stretch it all the way to the daily time frame, you can see the upside on silver can be quite interesting, right? So we have this big move here. If we can get a buy trade entry and then we look for this, it can be huge upside potential. Okay, so that's the one on silver. Keep an eye on that. A crude oil, okay, has been coming down quite significantly, and the market is basically respecting this channel very neat, right? So what we can expect is that as the market continue to maybe drop, okay, from here, this can be very, very similar to the pattern that I mentioned in Aussie dollar. We get a drop. We're getting very close to some significant areas over here where we have the bottom of a channel. We have a 127 extension around 7690. So if we can get a crawl pattern, okay, which I mentioned in Aussie dollar, if we can get a crawl pattern confluencing with the fib, confluencing with some technical patterns, if you add in an oscillator or RSI, you can see a divergence. That's great. You can look for a counter trend. Okay. Overall for crude oil, as long as the market has yet to break this bearish channel, you want to maintain a bearish bias. But of course, if you can look for a buy here at the bottom, even as a short-term trade to the upside, it may be something interesting for some of the shorter-term traders as well. Okay, or if you're more aggressive, you're a counter trend trader, that's where opportunity comes. Okay, so that's on oil. S&P. Okay, general equities overall, it's still bearish. The momentum is very clear, right? It's due to downside. But we've entered this area here, right? So again, we have a 1, 2, 3. We've entered this zone, which most of the time is going to give us a little bit of a reaction. So be aware to not be so aggressive in selling at this moment, because we can expect a bit of a pullback. If I were to pull in a fib from swing low to swing high, the 50 and 618 basically comes back towards 3917, which coincides with this entire area of support resistance as well. So if again you're a counter trend trader, you can look for the buy, but if you're trend following, you want to stay away from this for now. This is also important for those of you who are maybe looking at longer term investment. You're looking at, okay, if I'm investing in the indices, right, for the long run, should I be adding position now or should you be waiting? My answer to that is you can add now, but mentally be prepared that the overall equities market can still fall lower. Okay, so have we seen the bottom in equities market? The answer to me is no. Okay, I still believe that there are more downside in the equity side of things. especially since the Fed is still hiking from a macro analysis perspective. As long as the Fed is hiking in a tightening, in a restricting financial system, generally the stock market is not going to be beneficial to investors, right? Which means stock market are likely going to keep falling. Okay, so just take note of that as well. Good. Bitcoin and Ethereum. Bitcoin, I think over here, something that is interesting for some of you, okay, if you're more aggressive in taking counter trend again, you might get an opportunity with the break around 19900, okay, which is 19,900 level. Of course, we are seeing this previous support on Bitcoin being respected quite well. So far, we haven't really seen a very obvious break to the downside. So if the market can actually get supported on the low and bounce higher, breaking this 19,900 level, we can expect a bit more upside for Bitcoin. Now, personally, I'm not too focused on BTC, but instead I'm a little bit more interested in Ethereum, because the Ethereum structure from an Elliott Wave perspective is a little bit clearer compared to Bitcoin. Okay, so we have this bearish channel, as you can see, I've drawn it, right? So we have this one move down. This is a consolidation, X wave, and then we have another move down here, which we can put it as 1, 2, 3, 4, 5. We had a little bit of a reaction and a bounce. So if the market can clear off wave 4 high, which is 1425 here, I'm expecting this to go back and retest that previous high, maybe about $2,040. Okay, so that's the trade that I'm interested in. Okay, obviously, you need to have your proper plan strategy to get involved in it, right? Where to put your stop, what are conditions that you're going to look for entry and things like that. But 1425 is the confirmation level, and as long as the market is able to maintain above 1215, we're looking for more upside for Ethereum. Okay, so I'm actually more focused on this compared to BTC. Yeah, so that's the part on that. Okay, good. So those are the few markets instrument that I would love to walk through. Okay, hopefully that also gives you some ideas, some insights, into the week. What are some of the opportunities to pay attention on? What are some of the directional bias that I'm looking at? Okay, what are some of the things that you just want to stay out, right? For example, dollar yen, stay out for the week. I don't think that's gonna be setting up anytime soon. Whereas like euro dollar, Aussie dollar, dollar Canadian, Euro Australia, as well as silver and Ethereum over here, those are the one that you want to pay a little bit more attention. Good. Okay, yeah. Cool. Yeah, so any questions from you guys, right? So each session that we run over here, I'll do my best to maybe take 2 or 3 questions and then answer them. Okay, so if you have any, just put it into the chat. Then from there, I'll be able to answer your question. All good? I don't see any questions. All right. So I have one question over here. The question is, there are multiple speakers from the central bank this week. Would you consider those as potential market moving events? Let's take a look at that. Now, it's very difficult to say whether it's gonna be huge in the movement that they can cause in the market. But most of the time, it's not gonna be the case, right? Especially since, if you just take a look, like tomorrow at 7:30, we have Jerome Powell talking again, right? What you can do is, if you want to find out a little bit more, more into the details of like what exactly this is, you look at this due to participate in a panel discussion about digital currency at an event hosted by the Bank of France, right? if this topic here is nothing really related to inflation, which is the primary concern right now, nothing that is really related to the monetary policy that links to those banks, then unlikely it's going to be a huge market mover. Okay, I mean, it's talking about digital currencies, then maybe it's going to move the crypto scene, right? I mean, if Jerome Powell says that, all right, the Fed is going to outright ban all crypto, then naturally the crypto market can crash, right? Obviously, he's not going to say that, but just giving you an example of it. Okay. Now, most of the time, when you have a major central bank statement like the FOMC last week, and then you have the press conference last week, and then this week here you can see that Jerome Powell speaks again. Usually it's not gonna be central bank related because most of the time these central banks events are not put so closely after one another, right? There's no reason for them to do it. So if you look at this, right, last week we have FOMC already, and then this week here you have Jerome Powell speaking. There's a very high chance, as I mentioned, it's not going to be central bank related, right? And I share with you, if you want to find out a little bit more, click into it, go and see what is it. Okay, and then of course you have some of the ECB presidents speaking as well. You know, you can see over here, they're talking about US European geoeconomics. It may not be something very significant. Okay, so always tie it back to understand, like, okay, ask yourself, is this event relate to what is the primary concern right now? Does this event have any links and connection to the major monetary policy? If the answer is no, then there's a very good chance it's not gonna be a major event. However, sometimes, you know, when people talk, when you know, for example, like over here, maybe, you know, discussion, okay, and then the host of the event asks certain questions, and you know, there's a slip of information where initially the market doesn't know that, and then suddenly through that event maybe is unintentionally slipped out, okay, then that can also move the market, right? So you need to understand that not all events are not going to be market moving, but sometimes because of such things it can still cause a big move in the market. I think that makes sense, right? I hope you understand it. Cool. Okay, one more question over here I see is how to differentiate between impulse wave 135 and wave A and wave C. Pretty complex. You can't, okay, in a way you can't, because if I were to, you know, just bring you to the understanding of wave, right, just very basic, because if I were to go into the details of it, we'll need, you know, more time to really explain that and have like show you and finalize on that aspect. But in terms of Elliott wave principle, right, those of you who are interested in this, wave 1, wave 3, and wave 5 are labeled as impulses in the traditional conventional Elliott wave. Wave A and wave C are also considered impulses, right? And in a traditional Elliott wave, conventional way of understanding, impulse are made up of 5 waves that look something like that, right? So this 5 wave up can be a wave 1, can be a wave 3, can be a wave 5, and of course can be also your wave A and wave B. Okay, so how do we know which one is it? Is it 1, is it 3, is it 5, is it A, or is it B? That's where you need to understand the principle of context. Okay, where did this piece comes from, right? Previously, did the market came down very sharp and then we see this? If it is, then maybe, you know, this would be a wave A, right? Because it's doing a correction of this move. Or the context over here is that if this previous move coming down is very slow, very corrective in nature, okay, and then this move here can be maybe your wave 3, it can be a wave 5, or it can be, this wave C here, okay, or it can be a wave C, right? So similar things like that, it can be 1, 3, 5, A or C. The answer to discovering and uncovering like which one is likely going to be is the principle of context, right? So you need to look back, where did this move develop in relation to what's happening around it. Okay, hopefully that kind of makes sense. That's where the understanding of context is crucial. So for example, right, you look at this here, you have 1, 2, 3, 4, 5. Can this be wave 2? Wave 3? Maybe, right? I mean, if you take a look at this can be wave 1, this can be wave 2. If this keeps dropping in a very sharp way, then this becomes wave 3. Okay. Can this be wave 5? The answer is no, right? Because you only have this move down here. But can this be also wave C? In a way, yes, right? Because this can be your A, B, C. Okay. So as you go into labeling in the traditional and conventional way of Elliott Wave, it can start to get very complicated and confusing, right? And I always share with traders who wants to pick up Elliott Wave, don't start learning by focusing on how to label. Start by focusing on the nature and the characteristics of the move itself, right? And that's the part where you hear me says impulses, correction. That's how the market is moving, right? Focus on that first, and then build up slowly towards having the ability and the skill set to do labeling. Cool. All right. I see a question here. Matar actually asked, like, could you explain again why would you move away from the dollar yen this week? The reason for me not focusing on the dollar yen this week, based on what I'm seeing now, is because there are so many possibilities of this pattern here that can develop into based on an Elliott wave understanding, right? So this can be actually a consolidation, and we can see more upside from here. Okay, so if that happens, naturally you want to be buying, right? But as of this point in time, you never know what's going to happen. So we need some sign of confirmation that, okay, if this is going to go up, then I'll be looking for the buy. But we're probably not going to get that confirmation within this week. Alternatively, what we can see is that this is 3, this is 5, and therefore we are expecting more downside. So you can see that, one scenario is there's a good chance it can go up. The other scenario, there's a good chance it can come down. But for now, I don't have enough information to make a decision as to which has a higher probability. Okay, and for that reason, that's why I'm actually not paying too much attention on dollar yen. Okay, hopefully that makes sense. Yeah. Good. Hey, so great. Hopefully, you guys can take away value from such session. Okay, as I mentioned, I want to keep it concise, keep it sweet, keep it short, with the main intention of sharing with you the market updates, right? Market opportunities and analysis as well. Yeah, so far so good. Now, before we end off today's session over here, just very quickly as well, I think for those of you who joined in earlier, I think you realize that this session is sponsored, okay, by Zenfinix. So over here, in collaboration with them, just want to also share with you some upcoming events that we will have, as well as some promotions that Zenfinix has prepared for you as well. Okay, so you can actually take opportunity on it. Okay, so what are some of the upcoming events that's going to happen in October? Okay, first up, as I mentioned, this session, similar like that, is going to be conducted on a week-to-week basis. So every Monday at 9:30 p.m. GMT plus 8. Okay, so this 9:30 in the evening is based in Malaysia and Singapore time zone. If you are looking, you're joining in at another geographical location, just adjust your timing to the specific time zone. So this is gonna be conducted every Monday. Okay, so the structure is gonna be similar. I'm gonna walk you through what happened in the past week, what are some events to focus for the week, what are the market outlook for this week, and then we have a little bit of a Q&A, right? So this is gonna be ongoing, a regular one. Okay, and then we're gonna have a sharing in Chinese, right? So last week we did a webinar as well. Okay, so that's a part 1 series. On the 5th of October, we're gonna run the part 2 series to conclude that. So I know some of you actually joined the part 1. Then some of you perhaps are not aware of it then. If you want to join in for part 2, you can. And then you might ask questions like, okay, so if I missed the first part, how? Okay. Zenphoenix actually managed to record down the session. Okay, so obviously you can of course watch the recording after that as well. Okay, I'll share with you how you can actually join in all these events over here in a while. Okay, so just bear with me. Just want to highlight some of these events as upcoming. Okay, for those of you here who are in Malaysia and in Penang, October we're gonna have 2 physical workshops. Okay, one is in Georgetown on the 16th of October. This is gonna be done in English. From 2 p.m. to 6 p.m. And then on the 18th of October, we're gonna do a physical workshop in Chinese at Bukit Metarjam, right? So these are physical events, so it's only targeted for people who are in Penang, okay, or Bukit Metarjam. The timing is also different, yeah. 18th of October is in the evening, 8 p.m. to 10 p.m. Okay. So now, if you want to join in any of this session over here, whether is it online, in the future we're gonna have more events as well, right? What you need to do is to go over to Zenphoenix Malaysia Facebook page. Make sure you like it and you set receive notification so that you can get notified of any future events that's ongoing. Okay. Alternatively, I'll get the team, if you're on Zoom, okay, to drop the link where you can click and WhatsApp Zenphoenix support team. If you're watching on YouTube, the link is already in the description box. Click on that link which says WhatsApp. It will lead you to the customer support from Zenphoenix, and then you can actually ask them more about all these various events that you want to register. They will help you to register yourself into those events. Cool. Okay, so these are some of the events that is on upcoming. And then on top of that, together with my side, Zenphoenix has decided to sponsor you guys to enroll into the 4 trading pillars masterclass. Okay, this is a masterclass that's designed for FX trading. So inside this, we have designed for anyone who is very new to trading, right? So we start from like 0 and then bring you to, by end of the week, okay, to someone who is able to understand the currency market. Okay, so inside this masterclass, we cover fundamental analysis, technical analysis, sentiment analysis, risk management, trading psychology, and of course, putting all this together to craft your trading plan. Okay. Today, you're actually able to get this for free. Okay, it's fully sponsored from Zenphoenix, so you don't need to pay me, you don't pay Zenphoenix. How you can actually get this is to register and of course verify your Zenphoenix account. Okay, same thing if you want to find out a little bit more on this, WhatsApp the team so that they can actually share with you more on this. Make a deposit of $500 into your trading account, right? So this amount is fully tradable. Okay, it's just like a typical funding and deposit into a trading account. Okay, and if you are doing it by September, okay, you're also getting an additional $200 credit bonus from Zenphoenix. Okay, and this is only applicable in September, right? So in October, this is no longer there. So if this is something that you're looking into as well, then you might want to do it ASAP. Okay, because you have about 1 week. Okay, next week is already in the Oc. Okay, so in total, if you do a deposit of 500, you're gonna get another $200 credit, and in total, you have $700 as margin that you can use for trading. Okay, so these are the bonuses and the upcoming events. As I mentioned, if you're interested, click on the link, WhatsApp them, find out a little bit more about it. Cool. So yeah, that's all from me for today's session. Because this is the very first time we run it, right? So let me know, let the team at Zenphoenix know as well, if you have any feedback, or what are some of the things that you enjoy, if this is something that you would love to join in on a regular basis as well. Cool. So we're open to feedbacks as well. Good. So that's all from me for today. Okay. All the best to your trading for this week. Okay, and I'll see you guys in those respective events and sharing session. Good. So all the best. Good night, and I'll see you guys. Bye bye.